The MoneroTopia Price Report segment is sponsored by Exolix, a privacy-focused, non-custodial instant crypto exchange. Go to exolix.com to enjoy secure and completely anonymous swaps with no KYC or sign-up. Swap between Monero and 2,000 plus assets at the most competitive rates and with no limits. Exolix.com, your fast and secure way to privacy.
All right.
Hey guys.
GM body. How's it going?
Oh, man.
It's good. Hopefully I don't have too much background noise. I have a fan dying on my computer, so it might sound like
I think you're fine.
jet engine. Oh, cool. So yeah, it seems like StreamYard has good noise cancellation.
Yeah, it does. No,
I was listening to the last price report on one of my flights back home. I downloaded it before the flight took off so I could listen to it. And now a bunch of that stuff's changed already. That was just a week ago.
Listen,
yeah.
Trump
you
is
must
his
have been
own
having
man.
some fun, man.
Trump doesn't care what anything looks like. He could just do some stuff, say some stuff, change on a whim. And things are good. The market's going to switch. It's going to pivot, right? And how are we going to know? I'm sure you
But
guys saw
I gotta ask, did you listen to Trump when he said buy now?
I didn't hear that. I did not hear
You
that.
should have
Not
trusted
in
the
real time.
plan.
And now that is the question. So if he tweets, if we have another moment where Trump is like, now is the time to buy, do you listen, or is it a fake out?
No, it's too late. Now everyone knows now. No, it's too late.
Yeah, but this right. So they'll be self-fulfilling, right? Everybody's now going to buy, right?
Remember back in the day when Elon would tweet about Doge and Doge pump,
Yeah.
but he had diminishing returns on that, and eventually, like one way we knew it was the top was because he would tweet and price wouldn't respond anymore. So
Well, he
when
went on
Trump-
SNL, and then people were disappointed because he didn't promote Doge enough, and from there it was just tanked.
Yeah.
Yeah, the difference is he's not
that
just
was-
pumping and dumping Doge or Trump coin. He's doing it to the entire
The fucking global.
market.
Well, he did give us a prelude when he released Trump and Melania coins on Sol. That was a pretty good prelude to what he intended to do in general. Right? It's a nice little microcosm. So,
But seriously though, what do you do, right? Like if market's tanking next week, right? Like weird stuff happens with the bonds, the dollar starts to crash, and then they're like, oh, the system is broken, there's no liquidity, and like entire market just like starts to tank, and then Trump comes on. Just like I said last time, now is a good time to buy. Like, how do you like? I think it would pump. Like every like jackass is gonna buy. So unless there's like they're using it to a moment where they're like trying to mass sell, as like, I mean, it wouldn't it? I don't know. I think it actually would pump.
it did pump, right? Like that's what happened.
No, but I'm saying so if it happens the second time, like because obviously like we're saying diminishing effect, but I feel like I don't know. I feel like it would.
There's going to be a diminishing effect there, and there are still tariffs. Like, where do we import most of our stuff? It's from China, and there's still big tariffs on China, and then China retaliated, and it's only a 90-day pause anyway, so we get to look forward in 90 days, or maybe I guess like 85 days now, to do the cycle all over again, where it's like it's coming. We don't know. He's going to fake out. Are they going to be real tariffs? Some other country, maybe Vietnam, is going to be open, but then someone else is going to be closed. And markets hate uncertainty, bro. Like they hate uncertainty. So, like, what do you like? We'll look at the charts. We'll take a look at what happened. But are we at new all-time highs? No, just gold, but not stocks, not crypto. So it's a bit dubious, I think, that we would actually make it to new, fresh all-time highs. The overall macro environment doesn't support it. The uncertainty of the markets doesn't support it. The banks and the big investors, other than being inside traders, they're not going to want to support that either. Like there's already been so much leverage, and all this uncertainty doesn't contribute to any of that. And there's still bigger tariffs, right? There's still tariffs. It's still more expensive to get your products from China. Oil is still way down, and there's still a lot of reasons to think that there could actually be some international geopolitics happening between the U.S. and Russia. Perhaps Russia, they're trying to keep that ruble down. The U.S. can withstand lower oil prices better than Russia can. So there's probably a whole bunch of different factors at play, right? It's kind of like,
and we have a war with Iran brewing as well. So like that would throw everything for you know,
Yeah, we've always had a war with Iran brewing. East Asia
Perpetually since
It seems like
9/11.
the war
seems
with
like it's getting pretty
Oceania.
close. Like, it seems like that's part of what they want to happen during this regime. Bring that war to a head.
Trump's got a lot of favors he's got to do for people.
Yeah, exactly. We are getting some Monero super chats here. Sexy Tip, 3 cents, buddy. I know you were hesitant to share your creation with us, but thanks for sharing with your bros. I use your WM analysis with it to your wave magic analysis with it to do good in shit coins, and then use that pure profit straight up to pump XMR. I suspect most here do the same for the cause.
Nice.
There you go.
Nice, yeah.
Just keep
I'm
moving
happy to-
shitcoin gains into XMR. That's the play.
And
That's the name of the game. How we win.
Yeah. Shortwave, thanks again, man, by the way, for taking on the co-pilot seat last week. Shortwave, 25 cents. Monero stayed rock steady while Trump played the markets. SMA for the win.
Yes, thank you, Shortwave, for co-hosting last week. I was absent. I don't know. Would we say Monero is rock steady? I mean, I feel like it's at a similar bracket to Bitcoin now, where it's in this higher area, but it's still moving up and down within that area, similar to Bitcoin. I don't know if I'd say it was rock steady. It did go below 200 briefly.
Yeah, we actually came to some pretty obvious levels for it to hit. It was.
Then there's that one
actually
candle that
beautiful.
was really, really bizarre. That went all the way down to what, 165, something like that.
Yeah, I don't know
weird
if you
candle.
can see it here on the chart, but yeah, we got a wick down here to
Oh,
165.
wow. When did that happen? Holy shit.
That was
Just
that
briefly.
was
It's like
Monday.
someone
That was
trying to sell
Monday.
a lot, or they sold at a low limit.
Whoops.
Man, I'm getting a lot of like jitters and jumps on StreamYard. Is my voice coming through steady, or is it like sounding?
No, you
weird?
sound perfectly fine.
No, you sound okay. Yeah.
Oh, okay. Yeah, I'm getting a lot of that on just hearing from you guys. I think I don't know. I just have problems with my connection. I always do. Well, do we want to? Shall we jump into it?
Yeah, take it away, and I'm sure we'll ask more questions later.
Yeah, right on. Yeah, jump in anytime. Yeah, okay. So we got the Monero chart in front of us. We've got this pleb line right here that has been relatively good. I mean, we have some wicks down below it here on the back end, back in 2024. But this thing has actually been pretty good for places to look for purchases for buys. It's been your best opportunity to buy a Monero over the past couple of years, right? That's been your points of maximum opportunity. On Monday, maybe we wouldn't call this Black Monday. Maybe it's more like Gray Monday. Yeah, it was like the threat that everything was going to collapse. It kind of was collapsing, and then a whole bunch of fuckery started happening. There was a fake story. So Trump put a 90-day pause on not all the tariffs, but most of them, just not against China. But that news got leaked. Was it a day before, or maybe it was 2 days before? That news got leaked, and then the markets pumped, and then it was like, oh, fake news, bro, and then it dumped, and then Trump came out and was like, oh, 90-day pause, and then even his Secretary of Commerce was like taken by surprise by this move. So
Joke's on you.
It's like there's no amount of technical analysis is going to overcome that kind of fuckery. However, maybe I should save this for the macro. Now I'm kind of rabbit trailing. We're here looking at the Monero chart, but whatever. Remember last week I said that I'm not too interested in opening a short. You can do it. It's one thing you can do, but shorting is inherently more risky. And this is the reason, right? Some of the biggest pumps that happen in the market are rebounds, are dead cat bounces off of the bottom. Now, am I saying is what we have here a dead cat bounce? Yeah, I mean, there could be a bunch of dead cat bounces along the way. I'm starting to get the impression that this macro crash is going to be more like a 2008 style event. I think we have a fundamentally problematic landscape across the entire economy now. And I don't believe this pump that's happening. Like, okay, it's happening. I believe it, whatever. But I don't think this is the recovery. I don't think this sends us to new all-time highs. I think the whole tariff thing has to get resolved one way or another. And potentially, probably the Fed's got to step in there and lower rates a little bit. Give something, right? The market needs something. It's got to have some juice to squeeze somewhere. And the only, like, it should be concerning to you in a macro sense that there's this pump and dump action happening on the markets. If markets were just going to pump, they would just get leverage long and stay leverage long, right? Warren Buffett and Jimmy Buffett and all of the other people out there would be invested into the market, leverage long, wait for it to go sky high, markets going 2x, 3x, leverage on 20, get to 60x profits, etc. There would be no need to do this crazy nonsense of leaking news and then saying no and releasing shit coins on Solana and then saying that, you know, Trump's victory day or whatever the hell he called it, and then be like, oh no, just kidding, take backsies, right? And they wouldn't do that. That would be unnecessary if the markets are just going to go up, right? So I don't believe that this is, you know, this is the end of it. It's just the beginning, guys. This could be very much a 2008 style event where things just kind of like are like, we are on the way down now, right? So I've got a cash position. I'm waiting. I'm not getting back into the markets until I see clarity. I mean, don't get me wrong. I've still got my Monero and I still have some shitcoin positions. I guess I'll have to go down with the ship on those shitcoins, but that's kind of the point. I said I'm getting into these. They're going to be a hodl, just going to hang out. If they go down to nothing, you know, to zero or very close to it, whatever, right? I still got a big cash position. I'll be ready to pounce on the markets. And if I'm wrong, well, then everything will come back and my shitcoins will, you know, take me to sandy beaches and glorious heights. So yeah, I mean, that's kind of my strategy here. I'm personally not rebuying this at any point. And we'll get into that a little bit more. But yeah, right now it's really interesting that Monero like just had this single wick down here, touched the moving average cluster, almost touched the pub line, and we're basically back up to stablecoin prices, right? Just a bit above 200. I really love saying stablecoin now that has moved from 150 target price up to about 200 target price. It's beautiful. It might even be fantastic. To quote the style of our illustrious president. Not my president, hashtag. That one's an old one, though. Okay, so Bitcoin versus Monero. Looks like, you know, so I think and we'll show this on the Z-scores, but it looks like we've entered the regime where the potential pumpage is going to shine the other coins with more luster than Monero. And so we've got a little bit of a pullback here. This is, like I said, this chart, the TA is like a little bit instructive, informative, but you know, fundamental events are going to drive this chart and whether it goes up or down. At the moment, it looks like, yeah, we're probably, you know, sort of towards the downside. You'll notice that wick on Monday that sent XMR price down. Oh, looky, it also sent it down more than versus Bitcoin, but then it came right back up. So, you know, that's kind of dubious, right? It's always dubious. Whenever the market crashes, somehow Monero crashes more than everything else, including other shitcoins. So it's always like, what the hell? But okay, sure. So anyways, yeah, it looks like, you know, there is the optimism. People do seem to be reaccumulating positions. I think this is just more ripe opportunity for distribution from the big guys onto the little guys. So don't get whacked by the big guys. You know, don't be. I mean, if you're going to get into Monero, that's fine. You're DCA to Monero all the time. Sure, I got it. But you know, as far as like getting into the rest of the market, into shitcoins and back into Bitcoin and everything else, you know, be careful, guys. Personally, I would still just be saving up a cash position right here. I'd be sitting on that gold, hoping that, you know, some obvious level comes, and then you rotate your gold to something else. Right now, it's not clear, at least not for me. Maybe it is for somebody else, but for me, it's not totally clear. So also at this moment, I would expect this chart now to end up at least in this area, right? Bitcoin versus Monero is going to end up somewhere in that moving average cluster, which would hypothetically be about 3 to 6% lower on the ratio than where we currently are. Let's see. Anything else interesting? Let's look at Monero versus gold, just because gold has been like mega pumping. What is that? The weekly? Let's go to the daily. Get a little bit more resolution. All right. You know, this is a really messy chart. I've actually changed the way that I present the wave magic. I think I mentioned that the other week, like a week ago, 2 weeks ago. I added basically it's a randomness kind of deal going on. So the lines might print or it might not print, depending on how strong the cluster is. The filtering may or may not print a line, which gives you a little bit more clear visibility when some of these lines are, you know, not as strong as they might otherwise seem. Anyways, still looks like a pretty dirty chart. But yeah, Monero is man, I can't say what I think this chart's going to do. I imagine just based on the current trajectories of things, gold's going to continue pumping, Monero's going to continue being stable, and this chart is going to continue meandering onto the downside, and at some point grab this area here, right, that lower standard deviation cluster. So I'd look for Monero versus gold to get down here. Probably you might want to pick some up right there. You could get a little reaction bounce. That's not to say that this thing couldn't also go down to here, right? That's totally possible. So Let's do some percentages for you guys. Monero versus gold, probably very likely is going to go down at least 10 more percent. Relative, again, Monero relative to gold, and it could potentially go down 26%, but maybe we'll meander on down there for the rest of the year. I would maybe now be looking towards the fall, and we'll get into this more with the macro, but I'm probably looking towards the fall timeframe to see further, like to see the macro crash, like further crash, not like we could meander our way down, and there'll be some bad days, and there'll be some big mega pumps. I don't think we're going to new all-time highs here. That just doesn't make sense to my brain. Maybe I'm just going to be wrong. We'll see.
Have
but
some
there's still
hope,
problems.
Lottie. Have some faith in the market. They can do
I
it.
have faith in JPal. He's my own personal Jesus Christ. He's gonna save my bags. To quote, was it Cypher? No, it isn't Cypher from the Matrix when he like gives Neo gives him the disc. He's like,
I literally
Jesus
forgot
Christ.
who's the current chair of the Fed. It's not J-Powell. He left already, right? Or is
No,
it still
unless they
J-Powell?
kicked him out, and I'm just like way behind on the news. Jerome Powell is the Federal Reserve Chairman.
Okay, never mind.
Yeah. Sorry, excuse me. Yeah. So Jay Powell is going to be there. He's like, I don't know. I don't get it. How is he likable? He's so boring. He's so dry. I think he has this kind of like dry humor, and you can hear him like implying stuff, and you're like, it's like this guy just totally knows the game, and I don't know. I don't know why I like him. I shouldn't. He's a punk, right? He's a Federal Reserve guy with all the fake credits and whatnot. But for whatever reason, he's somehow entertaining despite being the most boring guy online or not
Because
online.
his power level is so high, you can't help but notice it. He
Yes,
speaks and the market moves.
One thing I do appreciate about him, he was the first guy to actually be like, it used to be that we would change policy and the markets, the financials would move, a few months down the line as a response. But
That's the
now
opposite.
financials move. Yeah, now financials move in advance of the anticipation of the forward guidance, and it's like, that's retardation squared is what that is. And it's like you can almost hear it in his voice, and maybe I'm just like implying things to him because I don't know, perhaps I'm anthropomorphizing what is truly an android. I don't know. Anyways, onward we go with the price report. All right, we talked about Xano. I'm not telling you what this coin is going to do. You'll have to decide for yourself. Here's the daily. Let's go to the 4 hour. You guys can just look at the wave magic, look at the astrology, the tea leaves, and decide for yourself what Xano is going to do next. Take your positions. Trading against Roger, trading against, I can't remember the guy that's always talking about Xano on Twitter now. He's based on everything else, but then he's like, and Xano. We're like, stop it, bro. You're cool.
Which
Everything
one?
else is like, what's
There's
his name?
several. There's Sal the Agorist. There's Aaron Day.
Yeah, Sal. Yeah, Sal is based on like everything else, but then he's got this Xano bag, so he's like having to.
It's very obviously like paid posts. He does the same ones like every day.
Yeah. So yeah, and then I think I see everyone in like Monero and others doing a pretty good job of just being like, bro. We're like, yeah, we get it, whatever. I guess you're poor, you need some bags to pump. All right, whatever. All right, we're looking at Firo here. Firo is, wow, really. Can we say kick the bucket? I mean, no coin ever truly kicks the bucket. You can always go closer to zero. Oh wow, holy shit! They tagged their all-time lows from 2017. Man, that's really bad. Okay,
Yeah.
It's over.
It's kind of sad. Now, I think we talked about this a few weeks ago. I don't remember what Firo does.
They do some research for Monero. I'm being cheeky. They're a Monero research coin, and they occasionally say some things that we almost for a while used one of their signature schemas, and they were like trying some stuff, and I don't know how they fund anything. Oh, anyways. All right, onward. Pirate Chain. We talked about this and how this descending wedge was probably meant to break down. Looks like it's breaking down. If somehow, by some miracle, the market's pumped to new all-time highs, Pirate Chain will probably just recover this range. At the moment, it's looking quite dubious for Pirate Chain. Not that it ever wasn't, but it's becoming more clear, at least from a price perspective. There's reasons for that. When you mine 90% of the supply before anyone knows what it is on ASICs, you could have problems that look a lot like the Zcash chart where it just goes down forever. Zcash somehow held up pretty good this week. I don't really understand how or why. No, I guess I do understand. I just have to assume that, something about corporate and Brian Armstrong and Steak and Paolo and Waigu and I don't know, something like that. Insert whatever memes you wish. But yeah, overall, Zcash actually held up pretty good, reasonably well through the Gray Monday event, which is probably just the opening chapter, one of the opening chapters in this whole event. Let's see. No, not worth mentioning. The other guys, I just need to delete those, I guess. Okay, here's the Z-scores. We're going to talk about the Z-scores. So you can see what happened with the crash with Monero. We kind of went down with everyone else here. And now things are starting to pump again, right? So actually, apparently we have Tron. We mentioned Tron last week. It was somehow doing better than everyone else, and now it's still doing better than everyone else relative to its own 360-day moving average, right? Relative to its own volatility. Everything referenced towards zero. Zero means that the price hasn't gone up or down at all. Litecoin now still having problems and troubles. Maybe we can compare XMR versus Litecoin in a second. Actually, I would like to do that right now. I haven't done that in a long time. I don't know why, but I feel more like we're winning if we're beating Litecoin. Maybe they say don't compare yourself to other people, but in this case, other coins. Let's see. Monero's doing quite well. Basically, I mean, pushing that upper boundary, right? Like, this is like early volatility, okay, but I mean, Monero is overall in an uptrend versus Litecoin over very long time frames. It's not massively uptrend, but it is, and that's amazing if you think about it. The fact, like, you compare these two coins launched at the same time, competing use case. Litecoin allegedly has privacy now with Mimblewimble. Maybe not. No one uses it, so probably it's the same problem with like with Zcash, where you get in and out of the shielded pool and you leave all these heuristics behind. And I don't hear anyone really talking about using Litecoin privacy, and darknets definitely don't. So anyways, the point is that you have these two coins with competing use case launched around the same time, and Monero's winning, right? Monero's price winning against Litecoin. How is that? It's been delisted. It has all these problems, all these negativisms against it, negative prevailing headwinds, and you got Litecoin, the Diet Pepsi of Bitcoin, and it's like, oh, you know, they got the
Diet
marketing.
Pepsi of Bitcoin. That's funny.
And so it's like, how is Monero beating it? Well, because we have actual organic adoption. That's why, because people actually use Monero, because people realize like that Monero is the real deal and a good coin. And Litecoin just has all of these like pumpamentals, maybe not pumpamentals, but it's got all of the support from the corporate structure and the pre-mining and all that. And, you know, kind of, I mean, the pre-mining, it wasn't pre-mined, but, you know, there is a centralized supply that was, you know, based on ASICs and Charlie Lee. We won't get into all that. But anyways, so I think it's interesting that two coins with this competing use case, that Monero is basically largely overall winning, you know, slowly, but winning. I don't know. Maybe we could call this range bound. You would almost want to call this range bound because the timeline has become so long, but it's range bound with higher lows at every single point. Like every single time we're making a higher low as the years go by. And at some point, this chart is going to push up against this level, this boundary right here, and we're going to get on the top side of that, and we'll be doing that instead of ranging beneath it. So that's almost certainly going to happen. You know, it still could take a couple years, but it's going to happen, like just based on the way that chart is and based on the dynamics of the market. Okay, take a big breath, refill. Talking like Ace Ventura over here. I don't have enough breath to say all of the things I want to say in one sentence, run-on sentence. Okay, so Bitcoin USD has okay, so we've basically, as of the Gray Monday, has tagged the lower has tagged the moving average cluster right around here. There's that 73,500 level that was the previous all-time high, the swing high. We said, yeah, you know, it's in terms of just general market movements and general bull markets, you set a new all-time high. You bleed out for a minute, or you don't bleed out, you consolidate, you come up, you pump, you expect that you want to test that one more time. You want to establish that and say, yeah, no one thinks it's going lower. That was support. And then you want to see the market do that. I'm not saying the market's going to do that. I don't think it's going to do that just yet. I think it's going to take quite an extra amount of time for that to happen. But just in terms of chart analysis, you would kind of want to come touch that previous all-time high. So for the bulls out there, establishing this as a floor would be a good thing. Whether that's actually established as a floor, we have yet to see. At the moment, to me, this chart looks like it's still ranging in the lower standard deviations, right? So price broke down right here. We've got the orange bands, right? The orange band cluster is right here. And then it sort of ranged in this orange band cluster, broke down. It's like, I'm going to get back into it, but it could easily just break down again. Like, this chart is not clear about whether it's done going down or not. So, yeah, just know that. It could go up, right? It could go up. It could recover. Like for all I know, Bitcoin could come up here to the top side. I'm going to tell you guys, just expect volatility from here on out. Okay, we've seen it. We've got the Trump coins. We've got the rugging, the fake news that actually wasn't fake news. The take backsies, and all of the reneging on the negotiations. And I mean, it's just know that all of that is uncertainty, and markets are going to vacillate, and insiders are having a heyday. And congressmen are getting even more filthy rich than they already were. So just the name of the game now is volatility. You could probably even trade it. I'm going to say volatility with downside movements overall. So you could be looking to short. Like once you get to, like, if we get some mega pump, like here's a good example. Let me show you something that I would actually probably do. If Bitcoin somehow in the next few weeks mega pumps to these upper standard deviation bands, if it pumps to that level, I am shorting, right? I'm getting short there, and maybe I get liquidated, but I'm not even putting a stop loss. I'm taking a big short with whatever leverage I think would be reasonable, and then hoping for another downside movement there. Like that's just how I'm going to play that. It'll be worth a punt at that point, because again, my overall thesis is that this isn't over, right? The macro situation is still highly problematic. And I don't think this thing is over. And I think that it's good to look for opportunities in this market, and there should be some big ones. So for the meantime, we're probably continuing to see Bitcoin dominance have some upward pressure here. I don't know if that's going to be like spiky pressure, or if this is like maybe going to fizzle out here and then try a downside move. It would kind of make sense, so just from a pure TA perspective, again, sort of brainstorming with you guys live on air, because we have these very long standard deviation bands. Let's go to the weekly and you'll see this a little bit more clearly. This chart becomes a little bit clearer. Bitcoin dominance has been on quite a tear, right? That is quite a big movement, and it is now encountering these upper standard deviation bands. That is not like a hard resistance, it's a zone of resistance. So if we think that the markets are like, hey, it's going to be okay, he's just negotiating, then people might be like, all right, alt season again. Maybe we get a wick down, right? Maybe there's a wick down here under the presumption of alt season, and then 90 days comes up and they're like, oh no, shit, go back to Bitcoin, right? So that could happen. I do like that the Bitcoin dominance chart maybe sort of corroborates the notion of the fake news of recovery that's not actually happening, right? The fake, I don't know. It's all fake and gay, whatever. Onward we go.
Trump wants to make America great again. He needs to give us a giga altcoin pump season. Let's go.
Giga pumps.
I'm ready.
Speaking of gigas, let's look at the mining difficulty hash rate. The gigas are about the same as they've always been, hovering between 4 to 5. Looks like Monero gigas, which is great because for the longest time, the hashes were somewhere in the like 3 giga range. So giga hashes have gone to 4, maybe 5 almost. Beautiful. Fantastic.
It's always nice to see this general uptrend, assuming it's not adversaries.
Yeah. Well, even if they are adversaries, depending on how adversarial they are, it might not. Like, no, I guess I see what you're saying. Yeah, like hypothetically, if it's the government,
need to be a single adversary. If it was multiple ones, they could all be competing for the 51%. And then that would be great if there's a lot of adversaries and they're all competing, because if they're competing with each other, well, none of them are gonna have a 51%. Right?
When your enemy fights your enemy, Monero's hash rate goes up. Apparently,
somebody asked about fart coin. I want price targets for fart coin, and somebody asked if it was real. You sweet summer child.
Fart coin is definitely real.
It's definitely real.
And it's probably on multiple chains, whether they're the same coin or you probably have to wade through all of the fart coins. I bet there's a whole, I don't know, armada of them. So be careful that you want to make sure that you buy the real fart coin. You don't want to buy the fake knockoff fart coin.
No, only the real one. It's the stinkiest. It smells the worst. We got a super chat here. Sheldon tipped $1. Body tucks after obeying Sunita's $1 million voice telling me typing Monero talk into cake wallet to send a tip. What can you tell me about unstoppable domains? Can I pay for a domain with Monero? Is there an other Web3 register like Unstoppable? So that depends entirely on what like TLD you're buying, which is the top level domain. So unfortunately, you can't pay for Monero for any of them. We tried to get them to take Monero, and they just weren't really interested. They're just not that cool. However, I will say the .xmr unstoppable domains are cool because you pay once, you own it forever. It's a smart contract that you can withdraw to your own non-custodial Ethereum or Polygon wallet, and you own that forever. And you can assign a Monero address, a Bitcoin address, basically whatever you want to that domain. And you can type that domain in on Cake Wallet. And if you have a Monero address, well, it'll pull up your Monero address automatically. So that's kind of how that works. And I do recommend the .xmr domains because you don't have to renew them. You buy them once, you own the contract forever.
Nice. I don't really know much about that. I don't have any domains. My domain is shitcoining and trading degeneracy, sir. Good answer, though. Nice. Okay, so Monero transactions. Looking at 30,000, 25,000, still a little bit of vacillation here. We kind of took a dip this week. Kind of weird. So the markets crashed and Monero bros were just like, do not sell. They were just holding steady as a rock. That's the only way to explain that dip. There's no other possible explanation. If anyone tells you that there is, tell them to pound sand. All right, just kidding. Honestly.
True. BCH pumping actually a lot.
Oh yeah, that was right. This one right here. So BCH in lime green. Looks like the green ones are pumping today more than the others. So yeah, BCH doing its thing. I don't trust BCH. I don't trust, like, it's all the same problem with the Bitcoin ASICs. You've got this like big centralized supply. A lot of the early coins were lost, so the ASIC people are the ones that have the BCH, and the price does these like crazy big pumps. Like I don't see Monero doing that, right? So like if BCH is a threat to the establishment, why doesn't its price dynamics have similarities to Monero? I don't think that it does. Although it has gone down a lot, it has more similarities to coins that have a very large pre-mine or very large centralized holders that are always trying to maximize value by distributing those coins when they're able. I've seen that on the BCH price, but I haven't seen like the dynamics that Monero tends to exhibit. So I don't know. Maybe I'm just being salty, would be the wrong word, because we're kind of winning against BCH, you know, slow and steady. But I don't know. I never really enjoyed that coin too much. I just felt like the social loss was too much when they supported fake Satoshi. Maybe I'm wrong. Maybe they come back. I respect that they've done so much work over the years, right, to make that coin something that's significantly better probably than what Bitcoin actually is. So, you know, at least I can tip my hat to them in that regard. All right, let's go to the macro. Everyone probably is excited that their gold bags are just crushing it, guys. It's insane. This is I didn't expect gold to perform this well, but you know, this is why you hold the asset, right? I like the coin. And it's at this point, I can't see how it's not going to go for this area right here. Right? Gold is going for 3,500 at the moment. It's smashed past so many of the other levels. And like right now, so for example, we talked about this purple line for a long time right here. And gold is basically in that purple line. Maybe here's what I need to do. I need to change the filtering on this. Let's just make that 30.
Kept forgetting to buy gold. Oops.
Damn, too late now. I mean, maybe it's not too late, but it's kind of too late.
I still have my gold backs, though. Unfortunately, because they're gold backs, you get only a certain percentage of the gold value based on their actual value.
Yeah. Yeah, they actually, like, the value that they trade at is like twice the price of gold typically, if I remember correctly. Let me increase this the brightness of the purple lines. Yeah, because these guys are relevant now. So effectively, gold is coming up into these purple bands right there. And typically, this is a place that you would expect some resistance, but given the way the gold chart is looking, the way that it's been moving, it could very well just be a temporary place where gold kind of does like this for a second. You know, maybe it pulls back and then it does this again. In fact, I would almost expect it to sort of ride that shit up until we get to that purple band up there. This is where you have to be really careful when you make when you make trading view scripts, because you'll notice something that happened here. The purple line is actually at 3,500. It's not at 4,000. The difference is the way that you calculate things on the basis of closes and candles and how many candles back trading you can go. So we're looking at the weekly. So it calculates on the basis of the weekly close. But when we go to the daily, what you get is a lot more fine-grained information that affects the calculation of this line. So yeah, that's like an artifact of just the way the calculation is done. So the real line, and I actually missed this one. So I was looking at multiple different lines and I was like, wait, which one is it? Because I hadn't realized what what the artifact was. And anyways, so the real line here is 35. At the moment, gold is shooting for 35. By the time it gets there, it'll probably be closer to 36. And at that point, again, that's the point that I'm personally probably rotating. And I'm really, really hoping, like, I would love to see something where gold actually takes its time getting there, right? Does something like this, maybe like midsummer. And then perhaps like the situation on the macro is looking like it's turning down, which gold will turn down with the rest of the macro, like in a broad crash. Although it has defied that notion so far. But at some point, if there is a true like big like major crash, 2008 style, it's over, boys. Then gold's going to go down with it for at least a short period of time. Anyways, the point is that this is my personal level where I'm going to be rotating out of gold and into something else. Hopefully, maybe it could even be the case that everything just looks ugly and I don't end up doing that. And I'm like, gold's going to crash, but I just don't want to be in anything else, not even the dollar. I've got enough of those. So, anyways, yeah, gold doing great. I don't have anything to say about this chart other than yay and congratulations to everyone that holds gold. Let's take a look at oil, right? Because oil is this asset that kind of tells you what the institutions think about the global economy. And at the moment, we're in the red zone, guys. Right? We talked about red zone here. This is red zone territory. Wait, no, sorry. Let me rephrase. This is yellow zone territory. We're on the border between red zone and yellow zone right now in terms of the oil price. What this tells you is that the speculators and the institutions that trade gold prices, they expect a slowdown in the global economy. They expect that people aren't going to need as much shipping because of tariffs are going to raise prices. People are going to buy less. So there's going to be fewer shipping needs, less diesel to power those boats or ships. If you're in the Navy, they get very upset if you call them boats. They are ships. It will require less oil to power the global economy if the global economy is going into recession, which it is. So the oil price remains stuck down here at like $60 a barrel. Realistically, this chart is probably headed down to the 45, maybe $50 area. But perhaps it could get a bounce, right? Like, again, you get big bounces even during bear markets. So perhaps oil could come up to the underside of these lines, which have already started curling down. This is classic rollover action. And then it'll continue its way down. So we'll let those tea leaves show us what they will show us as the price unfolds. But effectively, the things still look bad, guys, right? Things, shit's all retarded and everything just looks bad. Let's go to the Dixie. So one of the reasons gold has been pumping so much is because the dollar index, the dollar has been weak. And the dollar has been weak for obvious reasons because everyone's sort of like either expects some kind of intervention, Jay Powell's going to have to lower rates, and then, the 90-day pause. And so they really like, people probably expect that, hey, the dollar is going to do the printing necessary to keep the, to keep the markets going or whatever. So anyways, dollar index has fallen significantly, actually below like some key levels. So we get this horizontal level, and then we could also drag this down here. And the dollar index is effectively flirting with just like breaking down totally to go to a much longer term support line that's like, this is literally like a decades long support line. So this guy right here. In fact, I would be surprised at this point if the dollar index doesn't make it down there. So probably we'll see some dollar weakness over the coming weeks. Or coming months, right? Ultimately. Reverse repos, obviously. So reverse repos have come back down. So it's like there was this big spike, there was the fear, and then they came back down. I would like to have said, hey, people are buying bonds, right? But people are selling bonds. And the speculation here, is that, actually, before we talk about bonds, there's a comment by Mr. Anderson. He says the oil cartel could reduce oil production to keep the price as stable as they can. My assumption is they actually don't want to keep the oil price stable. I think that they want to fuck with the oil price, and I think they're trying to fuck with Russia. I think that's part of the mechanism there. Like the day that oil was crashing, like the day after that, I think the Saudis or some big oil producer came online or got onto the news, and they're like, we're gonna quadruple our production or something like that. They like pumped up those numbers pretty big, and that also contributed to the oil price falling. So it's like there's some geopolitics happening here in the background. There's like this kind of mash of stuff. Don't get me wrong, they're all kind of like part of the same club, if you will. But they have friendly duels. They compete for power, and they cooperate when they need to. So they're frenemies. They work together. They have gentlemanly conflicts. They have gentlemanly proxy wars where they murder millions of people in their proxy wars, or at least hundreds of thousands in their proxy wars. And then they sit down and they go to dinner and they have a nice dinner and they discuss the terms of peace. And this is how gentlemen's play this game, apparently. I didn't know gentlemen's could be plural, but apparently it is. Now it is. Anyways, yeah, so the bonds have been pumping here. So bonds have been pumping, and why, right? You would think, hey, people are getting out of bonds, right? Like they're scared. Well, for one, the market scare happened on Gray Monday, and then for a little bit of the week, and then the markets turned around on the 90-day pause. So what did people do? They sold their bonds and then they went to stock. So when you sell bonds, the rates end up spiking. The other thing is that China is reputedly dumping its bonds, right? So maybe China's like, well, screw you guys, we don't want to hold your stupid treasuries anyways, and so they're selling now. They're selling American bonds onto the market, dumping them. So this could be an explanation for why we see a little bit of a spike here. But let's zoom out here, right? Let's compress and zoom out and ask ourselves: is this really a huge, crazy movement? Not really. Like, yeah, it's on the upper end of the volatility you see in bonds, but it's not like excessive volatility. So it looks to me like for the meantime, markets are probably somewhat stable. All right, so I'm not saying that it's going to crash tomorrow, but I think we are looking at the long kiss goodnight, right? This shit's going down. It's just going to take a long time to get there. And it seems like there's going to be a lot of value extraction on the way down. Seems to me like that's just going to be the name of the game. So if you want to do your own value extraction, just know that that's probably the market regime that we have entered now, that we've officially entered, where it's just going to be volatility and news events and retardation and value extraction. So just know now that like that's probably how things are gonna play out here over the coming months. So that's one thing. Like people, people can be good traders under certain market profiles or a market regime, and then the profile changes, right? The regime of how the market is structured changes, and then their trading strategy goes to shit, right? And they're like, oh crap, I lost everything. So you have to understand when you get these like sea changes in the market, and that's what's happened here. We have gone from a certain market profile into another one now, and you need to adjust the way that you play these markets on the basis of that profile. It should pervade all of your thoughts as you're doing trades, right? Even it should even pervade your algorithmic trades. If you're kind of an algorithmic bro, you're going to need to tune those algorithms now based on what's happening here in the market profile. You're going to have to think about that on your own time and how you might change your algos to make that work for you. We're not going to cover all of the nitty gritty on that here. I don't even know because I don't even algorithmic trade. So, please. Okay, we had some unemployment numbers that I missed last week where unemployment ticked up in February. This was expected, actually. The real question is this going to tick up on our next numbers? A tick above this current level is the foregone conclusion of a recession. Like that, it's as simple as that. Once the unemployment ticks up above the current like flat top that we see here, it's a recession, guys. Like it's a recession. It's going to be a recession. Maybe they'll try and hide it in some numbers. Maybe they're going to try and pretend like it's not happening. Maybe they'll delay announcing that it was a recession. That's like a typical thing that happens. Why do I say this? Partially because we have the GDP here is negative 2.85 from the last quarter. So not the last quarter as in January to March. We won't get those numbers for some time. I mean the last quarter as in from October to January. So anyways, but that was a negative GDP. You can see that was actually quite a big spike down. I expect this to be negative for the next quarter as well. That just makes too much sense. So I think with that, I don't think there's really too much else to talk about here. Hopefully you guys have an idea of, my view here on the market, effectively that it's a new profile, it's a new regime, it's volatility, it's value extraction. The direction is still down overall between here and say, I don't know, fall. But some of the biggest pumps happen on bear markets. So is it a bear market? I guess you could call it a bear market. It feels weird to say that. But it's very problematic. So just keep that in mind. Good luck out there.
Thank you, Body. Got another tip from Sheldon. Tux, could I hold my super cool .xmr swappable domain NFT in my Cake wallet? Yes, you can. If you use Ethereum or Polygon. And yeah, it is ironic that they sell a .xmr TLD and they don't accept Monero. It's not what we wanted them to do, but is what is. But yeah, thanks, Body, for the in-depth overview on the Trump troll.
That's
I don't know what to call this.
That'll be the title.
The Trump troll.
Be the title of this segment this week. Bro, wait. So did I just hear you correctly? You can buy an XMR unstoppable domain over Ethereum Layer 2 Polygon?
That's correct.
Interesting.
Now that's how. I mean, that's like how all of their TLDs work is that it's an Ethereum like smart contract. And of course you can offload it to an L2 like Polygon. But the part that's annoying is that they offer a .xmr TLD, but you can't buy it directly with Monero. You can only use EVM based coins, I think. Maybe Bitcoin too.
Irony.
Yeah, but you keep it forever. You buy once, keep it forever. Versus some of the other ones is that you have to pay a renewal fee to the registrar, which is unstoppable. But the .xmr TLDs, if you purchase a domain that's a .xmr, you basically just buy the contract and it's lasts forever, it never expires. So
Wait, help me understand something. I thought Handshake was doing TLDs. Can you get an XMR .xmr TLD over Handshake?
is that another Ethereum like
No,
TLD?
Handshake protocol is like a totally separate blockchain. They launched and they said, hey, we don't want to overlap with any of the existing TLDs. They actually reserved them for all of the ones that exist. And then they said, we just want to offer new ones. And they have the recursive. They offer, I don't know, like your purchase of the coin is the purchase of the TLD. And it was this whole thing. They fair launched and everything. It was pretty interesting. I thought it was pretty cool.
Yeah, I'd say probably not then if they're trying not to overlap. Unstoppable domains is the one place you can get a .xmr, at least right now.
It should blow people's minds just a little bit, the extent to which Ethereum layer 2s are doing volume and like doing stuff. I know Ethereum price is dying and all the maxis are like, oh, and everyone's like, oh, it's a scam and it's dying. Look at the price. It's like, yeah, but it's actually, it's doing all the layer 2 stuff y'all claimed it was going to, that Bitcoin would do since forever. It's actually doing it. It's just destroying. It's orders of magnitude difference volume happening on these layer 2s. And it's actually for like interesting stuff like TLDs, right? Or there's even trading platforms on there now that are like they're algorithmic trading platforms. You put like it's literally a transit, like you put the transaction in, and that represents a contract between you and like some counterparty in terms of Oracle reported prices on a whole like bunch of different assets, not even just crypto assets. Like you can get commodities. You can trade foreign currencies, right? Like you could trade the US dollar versus I don't know, like the British pound or whatever on some of these platforms, and they use oracles to report those prices. Now, yeah, I know. I mean, could the oracle fuck the price over and screw your trade? Yeah, I mean, sure, but nonetheless, it's happening. Like all of those things are happening right now on Ethereum layer 2s, and I know the price is down, but the volume is up and the usage is up.
Is there a gold token that you would recommend?
I would hesitate to say I recommend it, but PaxG is like the most popular one. Yeah.
Because it's like, if I want to throw a few, if I'm trying to like just buy a little bit of gold right now, it'd be so much easier if I could just throw a few bucks into one of these supposedly gold bag tokens. And then, have it immediately instead of having to go actually like buy gold or I guess use one of the more controlled custodial solutions.
Yeah, I mean it's going to be inherently custodial. It's not because the token itself isn't custodial, but the contract is owned by Paxful, and they're the ones holding the they're the ones holding the gold that represents the value of the token.
Of course,
there's also Tether Gold out there. I'm trying to find it. I've seen it before. PaxG. I want to try and find. Surely there has to be a contract address for this. I have seen a contract address for this.
How big is like the volume for Pax Gold?
I'm trying to look at it right now. I'm having a hard time. So there's a Bybit perpetual contract. Let's just go to the crypto and filter by that. Usually what you'll see is like an Ethereum address. Like you'll see an ERC20 token address, but I'm not seeing it here. I guess I'll have to find it. I swear that I've seen it, like the actual like ERC20. Oh, here it is. Uniswap. Okay. PaxG versus so if you want to actually see all of the volume, like you'd have to add up the PaxG USDC volume on Uniswap v3, and then you have Polygon, right? So the layer 2s, you'd have to sort of add all these up, and that's obviously a little
yeah.
But
so where is it mostly traded? It's like how are most people getting into PaxG?
I don't know at this point. Like I haven't looked at it in a while. You could get to you could do Ethereum layer 1. So right, if you're dealing with say 10K or more, I mean transaction fees are all pretty low right now, so you could probably just buy with smaller amounts, but they could go higher. So I probably would say, hey, 10K or more, you could buy on Ethereum mainnet. as an ERC20 token. But then there's Polygon and Arbitrum and all these other different layer 2s. It looks like it was primarily Polygon. So if you wanted to trade smaller amounts of gold, you could do it over Polygon. Again, obviously, it's, you know, you're relying on the trust that Paxful or Paxos, I guess, is holding that gold. There's also Tether also has like a Tether gold, right? So they've got their Tether USDT, whatever, but they also have a gold coin as well on Tether. I don't like Tether, but I mean, I guess, I don't know. I guess they keep surviving, so maybe it's maybe it's trustworthy. Anyway, so I'm sorry, I can't really answer your question as specifically.
No worries. So, buddy, I mean, you're saying 2000, potentially 2007, 2008 level of crash.
Yeah. I mean, that's we have to see like everything. Maybe
I mean, that's
kind of
like what I'm kind of I you know, I hate to phrase it this way, but kind of hoping for, because I know a lot of people get hurt in the midst of that. But
let's go.
But I feel like, you know, it's one of those things, right? If too many people are expecting that, then that's obviously is not what happens. I
don't think too many people are expecting that, honestly, man.
No.
Like, I don't see it out there. I think people are still all on the hopium train. They're like, all of the MAGA people they're all like, yeah, you know, Trump is master negotiator. Yeah, it's going to be a little bit of economic problems, and then it's going to rebound, right, to the skies, to the moon, right? That's what they're all like. I don't think they're expecting a crash, like a total crash. Some people are, but I don't see that. I don't see that as a popular prevailing narrative at the moment.
Yeah, and it's pretty crazy, you know, with the midterms coming up, right? Trump is going to have to try to make some moves to save that, unless he just completely gives the FU to the entire party and doesn't care that they get wiped out. But that's going to put a lot of political pressure on him to do things to try to prop things up and win back the market.
I mean, we're still easily like a year and a half away from that, though, right? Like, that's a lot can happen in a year and a half.
Yeah. Comes fast though. Comes fast. Like, you can't let things go too far, right? And then there'll be no getting them back. So what do you see as being like the 2000? So when you say potential like 2008 type thing, so you see entire market going down another what? Like
which markets? Like the S&P?
Like entire macro market, yeah, going down another 20%, 30%.
Yeah, basically.
NASDAQ.
Like, so for example, this orange level, these orange bands would like be a really headliner spot. Things in a true like crash scenario, they could go lower than that, but that would be minus 43% on the NASDAQ, right? So that would be a pretty heavy loss. That would be pretty close to the 2008 levels.
And what do you think really, you know, becomes the cause? Is it like a liquidity crisis, like something with, you know, the dollar? You know, everybody's like, China's selling the dollar, drives the dollar down.
I mean, so first you have to start from the perspective to understand that everything in the markets have been hyper financialized. Like, they rolled the entire nation's mortgage structure into these like hyper financialized assets that they gambled on with 20x leverage, right? They did that in 2008 and they didn't stop. They papered over it, they recapitalized the reserves, and then they expanded that operation, right? The derivatives market is, you know, in the hundreds of trillions of dollars, that way beyond the actual amount of global wealth. Okay, so with that in mind, you have to realize that like they've leveraged the future as much as possible, the expectation of what things will become. They've tried to leverage that to the nth degree. And so when you get these like normal pullbacks, when you get like a normal recession or some kind of tariff war that's going on and causes uncertainty, et cetera, and then we get like a recession, like a regular recession, all of that unwinds to these massive degrees. So it's like, it's not that the economy is like utterly collapsing. It's just that the financials have to collapse because that leverage has been like so overdone that it has to unwind to some like level. And then because they've spidered that into everything, then you actually could see the economy collapse as a result of that, because of the way they've done the monetary system. So I know that's like a really like dancing kind of way to answer that question, but yeah, I mean, it's an economic collapse that sort of happens because of the hyperfinancialization and the spidering into the entire economy. Even though, like, if that wasn't the case, it could just be a regular recession, right? Like, that could be the case. So, but no, I mean, I do. This thing is like, there's still the big problems. Like, there's still the macro headwinds. China is still retaliatory tariffs on the United States, and the United States is massive, like 80 or 100% tariffs on China. So, like, our stuff's going to get more expensive. The global economy is like ridiculously interconnected, and so we can't just be like, oh, let's start producing let's start producing paper in the United States, or let's start producing, cutlery in the
Yeah,
United
that
States,
whole
right?
plan doesn't really make sense, especially like given that any factories that they should be building right now would be like robot based, right? Like unless they're like moving backwards, right? I mean,
Yeah, that's another good point, man. Like if they're going to build new factories in the States, guess what? It's going to be a lot of AI,
yeah,
or
exactly.
maybe not AI per se, but there's probably going to be neural network integration into that, plus all of the regular, like, quote unquote AI that already exists, all the automation. They're going to be automated factories that don't provide like necessarily big, huge jobs, except for maybe the engineers designing it and the people that are building it. But these are not going to be like big, millions of people auto manufacturing. It's going to be like
Right, and
pretty
where are
limited.
you getting all the capital to build these factories when all the parts and everything is coming from these other countries, right?
Yeah.
Like, how are we even building these robot factories, right? We're not going to start manufacturing all, like, it's a chicken and egg problem too.
Yeah.
And then so like timing wise then, so you see this coming to a head, like you said, by the fall, you think would be like where we would be at the bottom of the market or something?
I say that mostly out of my bias for like having seen some fall crashes. There was the
Mhm.
2015 scare. There was the 2008, 2001. 2001 and 2008 got started in the springtime and then continued on down and had their like the true gasp moment where everyone thought the world was ending in like October or August or something. So I say fall. Like, we got to play it by ear. We got to stay versatile. At the moment, they've got a 90-day pause. They got a 90-day pause on the on further crash, on like terrible, terrible crashes. So
Do you
okay,
think
we'll see where that goes.
Trump tries to kick Powell out?
Not. I mean, maybe, but right now, no.
I
Like,
could see
there's no
that
reason to do
happening.
that.
I could
It,
see
it
that
could
happening.
happen, but Jay Powell
Yeah.
had his back in 2020, right? Like, the Fed printed all of the money that Trump wanted them to print. It was not a problem. I mean, they tried to be like, hey, we're going to be responsible and we're going to dial back our balance sheet purchases or something like that. Back in 2018, there was the, what do they call it? The taper tantrum, where the Fed was going to taper their purchases on the balance sheet. But then they immediately like coalesced and like, oh, just kidding, let's lower rates now. and then the whole C word happened. And then they just printed all the money that Trump wanted them to. So like, I don't see any problems there for Trump, not in the immediate sense.
And I mean, and right now though, I mean, it looks like if anything, they have to start raising interest rates, right? Because they're tanking the dollar.
I mean, that's a short-term movement on the Dixie. They won't. The Fed typically isn't going to move on like a short-term drop in the value of the dollar, and it's not even in their mandate. To support the value of the dollar is not in their mandate. They talk about their dual mandate, which is to
Yeah,
support employment.
right. And
Crap. What's the other one?
prevent
Yeah, yeah,
inflation and support
yeah.
employment.
Prevent
Yeah, like
inflation.
when you hear
Exactly.
Powell talk, it's the same. Like they have these like 3 hour, Q&A, and it's the same question asked over and over again in a slightly different way to try to get more information out of him, and he just responds the same way. Well, I have a dual mandate, and I have to lower. Like it's like you don't even get any information out of them because like it's pretty simple at the end of the day what they do, right? It's like they don't really have much wiggle room at all.
It was
But
interesting for a while. During the bear market, it was really interesting because he was speaking between the lines, like in typical lawyer fashion, right? He was saying a lot of stuff without saying stuff. Um, and that was interesting to listen to. For the past like 6 to 9 months, it has not been, more like 18 months. Like for the past year or two, it has not been that interesting to listen to him talk. Because you're right, yeah, he just says the same things
yeah,
over and over again. We're going to be data driven. We're going to wait for the markets to tell us.
right.
We have responsibility. The projections are this and that. And you're like, okay, right.
Yeah. Like we want to do
Nothing useful.
this, but we don't want to, increase unemployment because that's our mandate to lower it. But then we also want to lower inflation, but we don't want to do that too much. Like, yeah, it just kind of goes back. So, I mean, it seems like we're entering stagflation, right? If we're not there already. So, what is then the likely thing that they will do?
They're probably not going to do much. They're not going to do anything until things reach a breaking point. Historically, that's been what the Fed does. Like they try to be really slow, really steady state. They've been not relevant for the economy basically for the past year or so. And then at some point they'll become relevant again, right? When they again, everyone's thinking the same thing. Emergency measures. is shit going to crash? And if it does, they're going to have an emergency meeting. They're going to lower rates, probably restart their balance sheet purchases again to rescue the economy. That won't happen for some period of time. J Powell is effectively, so this is like the reading between the lines that I just said. J Powell is after the Trump victory day or whatever the hell he calls it, redemption day or something. Day. What's that? Liberation Day.
Yes. Liberated from our money.
Yeah. So after that, J Powell gets on a big conference and he basically says, we're not going to do shit. We're going to wait until like, I don't know, something happens and then we'll have to act. And he said, yeah, and we've got room to act. Like, so if the markets are like really, really scared and shit crashes, we can come in there and like, lower some rates. We've bought ourselves some room. He didn't say all that. Like, I'm saying that, I'm embellishing what the lawyer said, but that's what he said. Like, there's no, in my mind, like there's no question about it. Like he said all of that, but in a very like proper kind of fashion. So it's kind of at the point now where the Fed is starting to become slightly more interesting again, because J Powell has to tell you, he has to like indicate things rather than saying them outright. And that's basically the things he has indicated. So he ain't going to do shit. Nothing's happening in terms of Fed policy changes at the moment. We'll have to wait for like some big market headliner movement before they actually really do anything of substance.
And we'll be here to watch it all happen. What would be fun though to watch Trump try to kick out Jay Powell, and I'm sure that would cause like repercussions in the market.
Well, I remember, this is why I had an idea that he was already gone. I remember towards the beginning of Trump's term, Jay Powell said that if Trump asked him to leave, he wouldn't, and then he later rescinded his comment. So I guess nothing has come of that yet.
Shit, I didn't hear that. That's hilarious.
Yeah,
I love it. Why do they have to make the theater so entertaining?
To the degree to which, like, Trump potentially get rid of Jay Powell? Like, could he just like?
I guess it's questionable because the Fed's technically, the way it's set up is it's ridiculous. But also, I like all the comments of people saying, Trump's finally getting rid of capital gains tax because you will have no gains, so you won't pay any tax.
Yeah, no, he's getting rid of capital gains, not capital gains tax. He's getting rid of capital gains.
He's getting rid of capital gains tax through having no capital gains.
Capital gains.
Exactly.
I said I'd get rid of capital gains.
Yeah, I missed part of your guys' conversation on the industry tariff stuff. But like realistically, like, okay, maybe one of the incentives of doing this is to bring industry to the United States, but that's like a small part of it, and that's not like the whole picture. Like, really, if that was the only focus, they would need to be doing at least a couple other things: reducing regulatory and tax burden within the United States, and then also incentivizing export, so paying people to export with the tariff money that they're getting, right?
Mm-hmm.
Once you see stuff more along those lines, if the real incentive was, because that's what they say it is, it's, the incentive is just to bring industry back to America, but we know that's not the case. It's also maybe some other things going on, like maybe they'll trigger recession for Fed rate cuts, and then the U.S. government can refinance some of their debt. It's always something else, really, but.
Yeah, like they're definitely. I don't believe that manufacturing coming back to the United States is actually a real proposition on this. Although they're going to play it up. Like, so here's an example. Yep. For the past 6 years, they've been negotiating with TSMC to build some big factories in the United States. They created like a legislative subsidy, billions of dollars to TSMC, so that they'll come to the United States.
Was that like the CHIP Act? Was that part of that?
Yeah, but they're under the Biden administration, believe it or not, and I think it even got started under the Trump 1 administration. But I think those were just talks. But anyways, so yeah, like they're going to be like, well, we did the tariffs and now TSMC built a factory in America to avoid the tariffs. Like, no. You already gave them billions of dollars of congressional subsidies. That's why they came back. The tariffs are like, you probably had to negotiate in spite of that for them to come back. But like, yeah, there's already like TSMC is already planning to move to the United States and build factories. But Trump is going to try and claim, and all his sycophantic supporters are going to try and claim that was the tariffs. Like, you already see the narratives. I already see them starting, and the false narratives starting. So,
yeah, I think it's I think it's a good thing, and I want to see industry in the United States, but. If that was their actual focus, you'd be seeing more than just these kind of tariff game going on. There'd be even more incentives for industry to move back here.
Yeah, exactly. It's a really hard, like, it's a fundamentally difficult economic question thing to solve. because you have all this cheap labor across the world with much lower regulation. So it's like way easier just to build a shitload of factories in poor countries, have them manufacture the stuff, and then ship it here. That's an underlying economic reality that's really difficult to fight against, and it has nothing to do with tariffs. Like maybe slightly a little bit, but like even if there was no tariffs, that would still be the situation. Even if the United States had big tariffs and the other countries did not have tariffs, it would still be the situation that it's a lot easier to manufacture stuff in other places and then ship the goods here. You're fighting against this underlying economic reality, and it's like, well, we need to change the fundamental landscape then, and that's going to be difficult to do as long as the United States gets to export its inflation as the global reserve currency to other nations. Like that's always going to be an underlying reality there.
Yeah,
And,
that's
these guys
probably the
know that.
biggest problem.
You need to make it cheaper to build an automated robot factory here than in China, which is really hard to freaking do, but that's effectively what you got to do, right?
We still have the materials problems, right? The raw materials, the processing, the integration, the single part that might travel across the border 2 or 3 times for various treatments to get assembled into a larger
here,
part.
Though, is regulation. Like, there's so much. Like, if you could get rid of regulations and make this like a pro-build country where anybody can start building any type of factory without jumping through a million loopholes and having to be some big established company that's politically connected. I mean, that's what America once was, and that's what we really lost. I know they're trying to do that, but I mean, there's just so much red tape. It's like, I don't know.
I don't think they are trying to do it though. They say they are, but I don't see it.
They're
actually
trying to do, right?
Yeah. I mean, there's so many things that like we could just sit here and brainstorm. Like, here's all the things we could do, and they're not doing even the easy ones. Like, just get rid of the income tax. Like, okay, you want to replace it with tariffs? Fine, I'm fine with that. Replace the income tax with tariffs, but get rid of the damn income tax, right? Like, now maybe we could say that we're trying to change a thing that could bring some manufacturing back. But as long as the income tax remains and the tariffs are going up, that's tax on tax. So we're getting double tax now, and no company's coming to America when they're getting these kinds of taxes. So it's like it's just hard to believe any of it.
We shall see, but yeah, things will certainly change if he gets rid of the IRS, gets rid of capital gains. That would certainly change things for sure.
I will have to begrudgingly accept the win if that actually happens and be like, all right, maybe they're doing something that's slightly not as bad as before.
I mean, it'd be hard for you not to be excited and happy about that, right? They eliminate the freaking IRS.
I might have some words.
Maybe they get rid of the Federal Reserve. I don't know.
No,
like
no. It's not going to happen.
No, I mean, if we see gold like really drastically start to move up, maybe something is happening behind the scenes. Like, what do you think of that? I mean, gold is really moving here. I mean, it seems like there's some big transition happening behind the scenes.
It's probably the case that other countries are helping to drive that movement. I mean, there's probably insiders that understand those movements are happening, so they're getting long gold. But there's probably a lot of other countries too, just like their central banks adding to their reserves, the people, whatever, et cetera. Like this is a global thing happening, right? Gold is pumping because there's global demand for it.
And then overall, body. So like if things, we go into some kind of 2008 type of crash, gold continues to go up as it becomes the only safe haven. Do you see Bitcoin also acting as a safe haven in that scenario, or it goes down with the broader market, goes down with the NASDAQ, whatnot?
Yeah, that's a tough question. I feel like Bitcoin is so integrated into the financial landscape that it probably goes down. I mean, I also think gold will crash with like the real, like if the big crash, the big one, like October 2008 or whatever, or September 2000. Like if that comes, gold's going to crash with everything, but it'll be temporary.
Where does the money then go in that scenario? That's where I don't understand. Like, where is it going at that point when nothing?
It's a woozy. It's a wazi. It doesn't exist. It's not fucking real. It has never landed.
It's removed from
Fugazi.
Like somebody just took an eraser out and took it off the ledger. Like it just eliminated. Like where does that value go when it's not going to any other?
So it's more like, okay, so the way to think about it, like the mathematical answer to this is that when you buy $1 worth of Bitcoin, for example, the market cap of Bitcoin increases by more than $1 as a result of your purchase. It's like there's some exponential in that function in the way that money flowing into assets changes its market cap. And then so it works the same in the reverse. So when people sell the S&P and the NASDAQ and they sell their gold or whatever, that market cap hit, maybe they took out $1 trillion was taken out of the market and people fled to the safety of cash or perhaps bonds. The market caps of those things decreased by more than $1 trillion because of the way that market caps work. So like market caps are somewhat inflated expectation of the actual wealth of stuff. But it's sort of, I don't know, maybe it's like, and I haven't really thought about it too deeply, but this could be like an epistemological problem with the way that we measure the value of things, because there's no other way to measure it except for relative to something else. And so it's just like this market cap deflation, the destruction of wealth, the elimination of wealth. If like you really wanted to try and put a better finger on it, you would need shitloads of data, but you would say, okay, where did that money flow? How did the market caps of things change? And then subtract the difference between the market caps, the quote unquote market cap of stuff that still exists, minus that which was lost. And then you could say that was the actual amount of quote unquote value lost, but it's also, again, mostly an artifact of how market caps change on the basis of value flows. Really, I don't know if that makes much sense, but.
And so in that situation though, so do you think US cash is the best store of value in that instance? Or I mean, it seems like it's not like things could turn around, right? Like, because what's happening with China, some new store of value arises. People don't trust the gold, the US dollar anymore. And
cash is
something else arises out of it.
Cash is the best store of value over short-term timeframes. Like that's kind of, even though the system is designed to devalue cash over long time frames, it is basically the best store of value over short time frames. And that's the whole point of currency, is that, hey, I can get out of something. It's highly liquid. I can move billions, trillions of dollars if I need to in and out of cash to go to something else without really affecting too much the value of that currency, of that money. That's the whole point of currency. And even though the system is set up that long-term cash in general, fiat, is going to decrease in value, the trade-off is that it's the liquid thing that holds value in the short term. Better than Bitcoin.